Dow and S&P 500 closed lower on Wednesday as the news of a spiking pandemic data and the prospect of a new rebound of economic lockdowns dampened investor optimism over signs of economic recovery. The Dow Jones Industrial Average and S&P 500 closed with modest losses while Nasdaq managed to close in green. Indian Prime Minister Modi said in a strong statement after 20 soldiers were killed by Chinese army in Ladakh's Galwan Valley. He said that India's integrity and sovereignty is supreme for us and no one can stop us from defending it. Nobody should have any iota of doubt about this. India wants peace, but on provocation India will give a befitting reply. He also added that sacrifice of the soldiers won't go in vain. RBI proposed several changes in regulation concerning housing finance companies, including doubling of minimum net owned fund requirements and exposure to group entities. Pidilite reported Q4 earnings beat street estimate on almost all front except profit. Revenue, we have seen a flattest kind of revenue. EBITDA jumped 10.6% over estimate. Margin expanded 170 basis point above estimates, while profits seen a decline of 24.4% over estimates. IGL reported its Q4 earnings report. We have seen that profit, revenue, EBITDA marginally declined over the years and margin expanded 80 basis point. JK Cement posted Q4 earnings report, seen an improvement on operational basis that boosted its profit 19% year on year. Revenue seen a decline of 1.2%, while EBITDA seen a jump of 22.6% over previous year same quarter. Margin expanded to 480 basis point, that resulted into a jump in profit of 19% year on year. Natco Pharma's Q4 numbers slips on all front. Profit declined 22% over the year. Revenue declined. Almost revenue was flat and EBITDA declined 13.5% and seen a contraction on margin to 430 basis point. HEG reported loss of 377 crore rupees in fourth quarter against profit in previous year same quarter. Consolidated revenue also fell to 374 crore versus 1346 crore year on year basis. Even company posted a EBITDA loss of rupees 497 crore rupees versus a EBITDA profit of 788 crore rupees previous year same quarter. On your screen is 30-minute chart of USD/INR June future, and we can see the USD/INR moving in an uptrend but in a very slow manner. So any day it's opening up, then it tries to move below or consolidates there, or in other way, if it opens down, try to move up. So this kind of activity is very difficult to trade on, although it is reacting from some important level. So level should be kept in mind while trading. 76.20 to 76.18 will be the level to watch out for, because these level will act as a strong support for USD/INR, and 76.40, which I have been mentioning since last 2 days, will act as a strong resistance moving forward. So any move above 76.40 will mark again a opportunity for 50 to 20 paisa kind of up move, or in other way, if it doesn't move up, moves below 76.18, it will again give a 15 to 20 paisa kind of a breakdown, and in that scenario we may see USD/INR getting towards 76 level. This is Nifty 30 minutes chart, and we can see that in last 4 days market has moved nowhere but to trade sideways, one day up, one day down kind of activity, and there are too much news flows from the market about the Indo-China standoffs, so that is keeping market again in check. So technically we can see that market is moving nowhere but to trade sideways, and it is forming a triangular kind of activity where if you look on a very granular basis, we can see here market is actually making a higher bottom kind of formation, but the tops are flat. So tops are flats which are pegged around 10,020 kind of level, and we have seen the bottoms are moving slowly and steadily up. So today being the option expiry on indexes, so will be very important to look at what levels will be important. So 9,870 to 9,830, this will act as a strong support for the market in the coming trading session, and the resistance will be pegged around 9,940. So these are the two levels to look out for, and market if moves or break these ranges, then it will give an opportunity to trade on either side. So it should be kept into mind. And this triangular activity which is market is actually taking a shape in a triangular activity, and this triangle is known as a ascending triangle where the bottoms are ascending and tops are flat. So it bears a bullish connotation, and any breakout above 10,020 will mark the breakout, and in that scenario we may see the market is moving actually 300 point up. So the depth of the triangle will be the minimum achievable target if it breaks above that 10,020. And in any case, if market moves below this trend line, which is again coming around 9,860 to 9,850 kind of level, that will again mark the breakdown of the market, and in that scenario we will see the market moving downwards, and which will be the failure of this consolidation, and we may see a deeper cut into the market. So levels will be quite important for coming trading session. This is 30-minute chart of Bank Nifty, and since the expiry is there today for index options, so Bank Nifty options will also expire today for weekly contracts. So it will be prudent to look at the numbers, the range for tomorrow, that will be around 2,100 to 20,100 to 20,000 kind of level will act as a strong support. So these areas will act as a strong support, and if it moves below to that area, it will give an opportunity. So in last 4 or 5 trading session we have seen that Bank Nifty moving in a jigsaw puzzle, like some one day up, the another day down kind of activity. So basically it is again moving nowhere, just trading in a sideways range, the broader range of 1,000 points we can say. This is moving sideways. So for coming trading session, 20,100 to 20,000 will act as a strong support area, and any move above 20,300 will give an opportunity at least for 300 point up, where the 20,600 level is pegged. That will again act as a very very strong resistance area for Bank Nifty. If you find any meaningful information in this video, then subscribe my channel and press bell icon to get future notification.